to respect each other and mute. I think so. After each slide, I'll give you a chance, to ask a question, so that then we'll give each other a chance, and then we'll then obviously proceed like that. Okay. Yeah. So let's please mute. Then there will be a chance for people to ask questions. All right. I hope I'm audible. Right, and everybody can see my screen. Can we confirm that again, please?
Yes, confirmed.
Okay, cool. All right. So I mentioned that's my name. Yeah, so we'll be doing current liabilities today. So basically how we structured this class today is that I'll be going through the summary of study unit 13, right? Just to go through it, I hope you guys did get a chance to go through it. So that we're more or less on the same page. And then Amy will then go through question 2 with us, which I hope you guys have also had a chance to go through. All right. So just an agenda as mentioned. So we'll just go through quickly what is a liability, definition of what a liability is, and then we'll just compare what a current liability is versus a non-current liability, right? And then we'll just go through some examples of current liabilities, and then also go through the recording of trade payables, how that flow works. All right, and then obviously we'll then go through question 2, which Amy will then take over from there. All right. Yeah, so I think, like I said, I think if there's any question, I'll give you the chance at the end of each slide so that to make sure we're all on the same page. All right. So what is a liability? Perhaps let me just pause here and ask if there's just one person who just can tell us what do they understand a liability? How would you explain a liability to your 7-year-old son or daughter or nephew? What words would you use to explain to them on what is a liability? Obviously, without looking at what the definition of the textbook says, just in your own words. Anybody? What is a liability? You can unmute and speak.
According to me, sir, good evening. A liability is okay. I can say amount, or maybe an amount that goes out of the company. So it's like sort of an expense wise. So it's not something that comes in, but it goes out.
Correct, right? So it's something which is going to deplete your resources, deplete your assets. You need to find money to pay someone. You need to do some work in order to repay someone, right? So it's something which is going to result in an outflow of economic benefits, right? And that's what it says, on the last point there. Right now, just going through what the study unit defines it as, right? So it defines it as being a claim that a party other than that of the owners, right? And it's specific to that because if you're an owner, right? I mean, you obviously put in resources into that company, right? So what you put in will not necessarily be referred to as a liability, right? And then it says of entity have on the assets of an entity, right? So a claim that a party of an entity have on the assets of that entity. So I mentioned that it will result in those assets being depleted. All right. And then it also says that it needs to be from a past event. So something must have happened in order that results in the company having a liability or you having a liability. It can't be something that must still happen. It's something that has already happened. That's why it refers to it as an event as a transaction happening from a past event. Right. I hope that's clear. And then it also defines it as being, or it can result from or it can be from a result of some sort of legal action that the company is currently facing. Obviously, if you're being sued or if you have to pay for whatever damage, that will also be a liability, because that will also result in an outflow of economic benefits. Guys,
Sorry, Sisanda. Sorry to
yes.
cut you off. Some of the guys are saying that they're struggling to hear you. There's a break on your side.
Is it? Oh no.
So I don't know.
Is it everybody, or is it for a few?
A few of them are saying there's a break, so you disappear here and there. Their line is breaking. I seem to hear you fine, but there's a handful that have come back and said that it's breaking. Maybe let's just go, and then we are going to distribute these notes and everything
Yes.
that's related to the session. And if anything sticks out or any other queries, we can come back to it.
Oh, sure. Okay, good. And so otherwise, from this, is anyone from the guys who is hearing me clearly? So that is it across the board, or is it just a few?
I can hear you fine.
Okay, good. Okay, so then it's hoping then it's not from my side. Okay, good. All right. All right. So any sort of any questions or any concerns from the slide before I go on to my next slide? Anybody? You can unmute and voice out your question. So I can't see the chat. By the way, Amy, if you can help with that, is anything in the chat?
No one's said anything, so everything seems fine.
Okay, cool. All right. And then now going on to
There's a hand up.
the hand.
I'm sorry,
Yes.
I tried to raise my hand, but
Sure.
so my question, oh sorry, evening. My question is, are you saying that even there's multiple ways to invest in a company? So if I invest in a form of a loan, is that also not regarded as a liability, or is this not part of the topic today?
Well, it's not part of the topic, but we can sort of entertain it. I want you to tell me. So if you're the owner and you decide, okay, I'm going to put in 100,000 Rand as capital, right? And then the balance, you're going to put it as a loan. How do you think the loan, firstly, how do you think the capital part will be regarded as? How would you classify the portion that we've classified as being a capital? I suppose I've given it away. So, right, so
No.
obviously there will be the capital portion, right, which is equity, right?
Yeah.
Right, and then the part which will be like a loan, say a loan to shareholders or a loan from a director. Do you think that would be a liability or not?
Well, that's what I'm thinking, but at the same time, I don't think it makes financial sense. But yeah, that's where my thoughts are taking me. That if obviously there's different types of investors and owners and all,
Yeah.
but if someone was to invest in a form of there's equity and then there's a loan. So if
Yeah.
they invest in a form of a loan, how do we record that? I think you're asking me that question, but at the same time, I'm putting it back to you.
I am. Yeah. No. True. Yeah. So I'm exactly. Your thoughts are correct. It will still be a loan, right? Because you are saying, company, this portion, I'm lending this to you. Obviously, there'll be terms attached to the loan that, okay, after 5 years, I want this money to be paid back, or after a year, I want you to pay a portion of that back. So even though it's from a director or from a shareholder, if it meets the definition of being a loan, right, it still is a loan, right? Um, then obviously there is a different issue now when you say, okay, you are investing capital into a company, which is obviously which then falls outside the scope of this study unit. Obviously, then that would not be regarded as being a liability, because I mean there is no obligation really for the company to pay you back. I hope that is clear.
still hope we're gonna get to that point at some point. But I think if it's a loan, it should still be a liability. But I mean, you're a
Yes.
chartered accountant. I can't argue much. But
No, of course you can.
no,
No, no,
I'm
no.
saying that if it's in a form of a loan,
Yeah.
then it should be clarified as a liability, shouldn't
Yes.
it? Okay.
Yes. Yes.
So
Yes.
in your last sentence, you said something about it not being classified rather as a liability.
No, no. Yes. So I was saying if now I was referring to the capital portion of it, so the equity portion. All right. So if you say I'm putting in 100,000 rand into this company as capital, right? So obviously that portion is not a liability. Do you agree?
I do agree, yes.
Yes. Yeah. But if you say no, I'm going to loan the company this much. Obviously, you'll have terms that this must be paid on this date or that month or that year. That would be a liability.
Also, we just leave it as a liability. We don't. It's not like liability and capital, also liability and equity.
No,
It's
no.
just a liability. It's something that we have to pay back at some point. It's just like a loan, a normal
Yes,
loan
yeah,
from the bank.
yes, yeah. So,
Okay,
so it'll either be a liability or it will be equity. It can't be both.
100%.
Awesome. Okay, guys. Right. So now looking at the next slide. Now current liabilities versus non-current liabilities. Right. So I mean, so this is simply the distinction of when you expect to settle that liability, right? So current liability, as it is, it's something that is now. It will happen
Sister
currently.
Sandra,
Please mute,
sorry to
guys.
interrupt you. Sorry. There's
Yeah.
still some comms where the guys are saying your line is breaking. They're missing parts of the conversation. I think when one of the students asked a question, they could hear his line fine, but yours is still breaking a bit.
Eh? Okay. Let me see. Wait. Let's see. Because then if it's across the board, then I'll be concerned. But if it's just a few, then I am. Hey. Yeah, I mean, my mic seems to be fine. Someone said someone can hear me, right? Okay, the few then that are fine.
Yeah.
So I don't think it's on my side, Amy.
On my side, I can hear you. It is breaks here and there, but I can still understand the gist of the conversation, and I can hear most of it. It's just a little bit here and there. So I'm not sure whose side it's on, but there's been a couple of students that have come back that say that it's breaking. Yeah.
Between. Okay, guys. All right, guys. I will try my best. I'm sure what to change. Let me see. How is that? No.
Yeah, that's better. Well,
Is it better?
It is better. Yes.
Because I've just unplugged the headsets. Okay, let's try it then like that. Hopefully there won't be any background noise. And I hope they heard the gist of the first part. Anybody questions on the first part? That's the first two slides that was not uncertain. So my time.
Yes, we do have. I think Neliswa has a question.
Yes, Neliswa.
Neliswa, you can unmute and ask your question.
Is it an old hand? Neliswa? Was it a high five?
I'm not sure. I'm assuming it's old hand because she's not asking it now. Maybe you can continue and then we can just monitor.
All right. Okay, that's fine. All right. So let's start off with non-current liabilities, right? So that is when a payment to be made, right, is basically more than 12 months after the balance sheet date or after the statement of financial position date. In other words, that if our statement of financial position date is, let's say, the end of December, say 2024, that liability will only be settled after December 2025. Right, so that portion will be referred to as a non-current liability. Right, so you will only be settling that obligation after 12 months of the balance sheet date, and then vice versa for a current liability. This means that you're going to settle this within 12 months of the balance sheet date. So again, taking an example, if our balance sheet date is the end of December 2024, we are only going to settle this, or rather we'll settle this liability between January 2025.
Sisanda, sorry,
Yes.
I'm so sorry to interrupt you. Now the guys are saying you are too faint now. They can't hear you. Maybe if you increase your volume, yeah.
Let's try this. Okay, let's try again. Is that better? Maybe I need to speak louder.
I think
Is
you do.
Better? All right, guys, I'll try and sustain my loud voice. But if I do talk, please do shout. It's okay. I won't be offended. Okay. As mentioned that, so current liabilities are liabilities which are due within 12 months of the balance sheet date, right? Which means that if our year end is at the end of December 2024, we are going to settle that liability between January 2025 and December 2025, right? So within those 12 months. If it goes beyond December 2025, any portion, then that portion needs to be classified as a non-current liability. Cool, I hope that's clear, easy to understand.
Yes.
Okay, cool. All right, guys. Right now for this part, I'm hoping we can do this quite quickly as well. So here, I want just the person, you know, for us to just make sure, you know, that we are on the same page. Like why would trade payables be regarded as a current liability? Anyone can unmute and shoot. Tell me, why would trade payables be regarded as current liabilities?
Because it's payable in the current year, financial year.
In the current financial year? Oh, do you want to just reword that a bit? So yeah. Actually, you are correct. But now, let's just assume that this is at the end of our financial year, right? So we basically we have prepared our books, and in our books we've got current liabilities, and part of those current liabilities we've got trade payables of, let's say, 100,000 rand. Right. So now, why would these be current liabilities? Right.
Sisanda?
Yeah.
Yes.
Yes.
Because you would expect the funds to be paid within the next 12 months. So that is why you've seen it as a current liability.
Exactly. Yes.
Your expectancy.
Exactly. Yes. Because I mean, imagine you being a supplier and you supply a company, and then they say, nope, sir, I'm only going to pay you after 12 months. I mean, that's very Unlikely, right?
Oh, I wanted to say it's because you can be able to pay it within 12.
12 months. Yes, yeah. So with your trade payables are typically what you would use in your company day to day, right? So those would all typically be paid within 12 months. I mean, or else you'll probably go into some sort of business and rescue because your creditors would be after you. All right. So yeah. So and the same principle would also apply. But let me check the for accrued expenses. Anybody want to give that a bash? Yeah. Okay, but let me go on. Yeah. So that same principle as well with accrued expenses. Do we know what an accrued expense is?
Bainand, your hands up. Go ahead.
Yeah, sorry. So if my financial year is January to December,
Yeah.
and we are now in the middle of the year in June, is trade payable still what I would pay in the next 12 months, or is it for the next 6 months until the end of the financial year?
Yeah.
Oh, sorry, current liabilities, the current portion of it. Is it for the next 6 months, or is it for the next 12 months in that case?
Yeah. Okay. So if you're sitting in June, right? So remember in June, you won't necessarily, or you won't normally prepare financial statements for 6 months, right? We normally look at a 12-month period, right? So in June it'll be more like your own management accounts, which you use to try and track. And because I mean, if you look at trade payables, I mean, the account by itself, by the nature of the account, it is a current liability type of account. So with that, you would still classify it as a current liability. But where it's important is at the end of, once you've got your 12-month period, because that's when you really have to then classify your liabilities, according to current and non-current, for reference purposes, and also for your financial statements for being audited and so on. I hope that makes sense.
Yeah, sort of. I'm okay.
Okay.
Thanks.
All right. Cool. Right. Yeah. So I was asking. So accrued expenses. Do we know what an accrued expense is?
Njani?
Oh, ma, please, ma, mute, ma. Hello, ma, please mute. Do we know what an accrued expense is? What do you mean when we say we have accrued expenses on our account balance?
We have a hand. Precious,
Yes.
do you have an answer?
Yeah.
Yes, these are the expenses that are related to the current financial year but are still unpaid.
Correct, still unpaid. Correct, right? So actually, even these, right? I mean, if let's say you have your telephone account which you have received in the last month of your financial year. Guys, please mute. All right. I mean, there is a very little chance of you going. Guys, there's still a bit of background noise. Yeah. So I mean, so it's very unlikely that you will not pay your telephone account within the next 3 months, 4 months after your financial year end, because obviously your service providers will be after you, because they expect that to be paid basically the month after at the latest. All right, and then just going into what is income received in advance. Right, who wants to have a dab at this one? Income that you received in advance, but you have not yet delivered the service or delivered the goods, but you've received the money.
Precious or Nosizwe? Precious, I don't know if that's an old hand. Nosizwe, do you have an answer?
I would say it's money that the person who paid it might still claim it back from you.
Right. So again, right. So this will also be typically within a very short space of time, right? Because I mean, it's unlikely that you will receive income. Well, actually, by the mere fact that it is a income, right? It means it's part of your day-to-day activities, right? So this should be settled, or you should deliver the goods, within typically within a 12-month period, right? Yeah. So that is correct. And then installments payable on a long-term borrowing. So obviously with this one, right, it needs to be we need to know exactly the terms of when is that installment going to be paid. If it's paid within 12 months, yes, it should definitely fall under current liabilities. As well as the VAT, the value added tax. I mean, as you know, SARS will come after you. There's no way that they'll give you more than 12 months, to pay back the debt that you owe to them, as well as a bank overdraft. I mean, this will also be typically, a bank will say, "Hi, guy, you need to make sure that this overdraft is turned over, so that you don't owe the bank any money, or else you are going to be charged interest. So that's also very, very likely to be paid within 12 months. Okay, good. Any other example that anyone can think of?
And Nosizwe has a
Besides-
hand up.
Yes. Nosizwe?
Unless it's an old hand.
Yeah, Nosizwe doesn't want to talk to me. Okay. Any other example that anyone can think of before we go on to the next slide? That would also be considered as being a current liability. Yeah, no, I also can't think of any other one. I mean, I think I've pretty much exhausted all the ones that came to mind. But I think what's important is the principle, right? Is that any expense or liability which you have, which you intend on paying. Oh, by the way, a nice one. If there's a loan, right? If there's a loan that you're going to settle within 12 months, let's say that you've had the loan for 9 years, and the loan is due to be paid up in full on the 10th year, right? So the full amount will then be classified as a current liability, because that full amount is now payable within 12 months of the balance sheet date.
Okay.
Cool. I hope that
Sisanda,
was...
we have a hand. Mo.
Yes.
Mo, do you want to ask your question? Mo?
Yes. Good evening, Sisanda. I have a question, but then it's a clarity-seeking question.
Sure.
With financial years, let's say, for example, now I have a business of which the financial year started this January, and obviously it's going to end in December. But then in the middle of the year, around June, I get to have an entry of income received in advance. So meaning that this income received in advance around June is going to run for the 6 months within the current financial year. So what does it happen? What happens with this entry that came in the middle of the year? Does it have its own run with the financial year thing, or it's still within the financial year that ends in December, since it's just going to take 6 months to December?
Yes, yeah. So there, right? So that will still be right within the same financial year, right? So let's say you have an income, someone pays you money up front in June, right? June, you obviously will then track that in July, August, September, October, and then November, December. Then if by the end of the year, right, you still have not yet delivered on that income, then you then basically classify that as a liability, right? Because I mean, because the financials that we prepare, those are normally for a 12-month period, right? So I mean, you can have almost obviously each month when you track that, okay, I received this income received in advance in month 6, and what is it now? Is it still an income received in advance, or has it actually have I earned that revenue, right? If you still haven't earned that revenue, it will still stay as being income received in advance until the month that you basically have earned that revenue. It will then obviously move from being income received in advance to being income, right? So you will track it from that point, and then obviously at the end of your 12 month, that's when you need to prepare. I mean, you will see that in most questions, you know, they will ask you to prepare this trade of payables or any account normally over a 12-month basis, because that's that's how reporting is normally done.
Okay, so when I close this account, what do I close it as?
When now?
The income received, or I use something else?
In which month? In June?
Okay, let me try and be specific. Let's say this income received in advance, it's for the things that I have to supply or that I have to give to someone else, to supply to someone else for the next 12 months, but then it started in the middle of my current financial year. So meaning that by the end of my financial year, I'll be left with 6 months still to be like delivering these goods.
Yes.
That I was paid for, right? So I want to know when I close my books on this current financial year, what do I put this account as? Because it's still continuing to the next financial year.
Yes. Okay. Now, so now, let's say now you had 12 tables, right? Which that you basically have to supply to this customer, right? The customer has paid in full for all 12 tables in June, right? And let's say that you are going to give the person 1 table each month, right? So come the end of December, you would have given the customer only 6 tables, right? Even though they would have paid for 12. Are you still there with me?
I just muted so that my background sound doesn't interrupt.
Okay, yeah, right. So so now this would mean that at the end of the financial year, so in December, you would only have 6 tables that would be classified as income received in advance, and the other 6 would be what you would have delivered, right? So then those would have moved from the income received in advance to being income, because you now have actually earned that income, the customer has paid, and you have delivered, right? Perhaps 6 and 6 may be a bit confusing. Let's say you had 18, right? 18 tables to deliver, and the customer paid for all 18 tables in June, right? June, the customer paid for all 18, and then you are going to deliver 1 table per month from July up until December. So which means that come the end of December, you would have delivered 6 tables to the customer, right? So which would mean that 6 tables would now move from this account of income received in advance and would be classified as income, and the balance of the 12 that the customer has paid for, right? Those would still be classified as income received in advance because the customer has paid, but you must still deliver those tables.
Oh, okay. Now it's clear. I understand now.
Awesome.
Thank you.
Great. Okay, cool. Then let's go on to the next one. Okay, now this is just to show the flow of recording trade payables. You know, first step, we basically have a supplier ledger. That's where you basically have your individual's ledger where you track what customer is ordering, what you must pay, right? And then that basically then gets consolidated into what is called as the trade payables control account, which is basically like a list of all your trade payables that you must pay, right? And then obviously then the last step is that you actually need to go and pay the this supplier that has supplied you with goods in advance. Yeah, and then obviously that's how then you will then basically clear your trade payable. Yeah, I'm just a bit weary of time. Yeah, so I think that's that's what it is. But I think obviously it will make more sense once we go through the question. But I think that's just the basic flow of how it works. Right, and yeah, I think that's it from my side. Any other questions or concerns or burning questions that anyone has? You want to go into the meat, which is the question.
Okay. So
Awesome.
guys, I'll try sharing. Thank you, Sisanda.
Sure.
If you guys can't hear at any point in time, please just drop a message in the chat so Sisanda can stop me. With that being said, I will then share the notes that I've prepared that go with the solution and the question. I will share it in the link, but I'll also then share it on my UNISA so you can access it. I'm going to share, but then I'm going to try to split the screen. So please let me know if you then see everything. Can you guys see the question?
We can.
Can you see? I'm going to try to split the screen so it's easier. Let me know if you can see both. And if you can actually view it, because I obviously want you to see the solution, or maybe let's go to the question and then we can go to the solution when we get there. Can everyone see it?
Yeah, so we can see just one side, Amy.
Are you seeing question 2, study unit 13, current liabilities, with all the colors? And
we're seeing the trade payables. Looks like the solution part.
Okay. I'm going to try again. Give me a second. Okay, can you see now?
Yeah, now we're saying question 2, study unit 13. Right?
Happy.
That's great. Yes.
Okay, that's the correct one. Okay, so just a bit of intro, guys. My name is Amy. I'm also then a qualified chartered accountant. I'm hoping to add some value to today's sessions and give you something to impart with, just a different way of viewing it. We've obviously seen the WhatsApp groups, and a lot of the commentary coming from it is that there is some confusion. So Sisanda and my aim is to try to bridge that gap and help you where we can. This is a learning platform, so there's no such thing as a silly question. Ask as much questions as you like, just so that we're all on the same page and that we can impart knowledge and help you along this process. Okay, so basically this question, what the thinking process behind answering any accounting question is obviously to go through the information and then look at the required. So I've highlighted everything and linked that back to the solution to aid you in your thinking process, and this will help you with the notes that come through as well. So if you look at the required information, so it says the following information pertains to Zack traders at 28 Feb 20.5. So they then give you the balance.
Sorry, Amy. I see
Yes.
the hands already.
Okay.
Perhaps whether or not are there any questions, or can you wait until the end? Not sure how you want to do it.
I'd prefer to wait until the end for questions so that we get through the entire question, because my worry is there's an hour remaining. We may not have full time to get through everything, and then we'll try answer questions as we go, or at the end rather, so that we get through all the questions.
Happiness.
Unless there's an issue with hearing or or something like that. I think in the interest of time, that'll work better.
Yeah, I think somebody's saying please zoom in. Should we not? They can't see it on their side.
Is this better?
Yes. Yeah, that's.
Okay.
Fine. Thank you.
Okay, cool. So you'll see they talk about the trade payables control balances. They give us a debit balance and a credit balance, and then they give us this trade payables ledger. So automatically, when you see a question like this, guys, please make note of which financial period you're looking at. And also these balances are important, because if you go to the required, obviously we're jumping a few steps ahead, but they say take the above information into account and prepare the following in the accounting records of ZAC traders. The trade payables control account in the general ledger. Can whoever that is please mute? So obviously they're giving us the trade payables control balance up here, which means this balance here needs to come through in this accounting record. Sisanda, can you please mute whoever's unmuted?
Okay, let me try.
Okay, adjusted list of trade payables balance, and you'll see this is then talking to the trade payables ledger.
I cannot see them.
The initials is NZ.
NJ. Sure. Quite loud. Okay. Can you guys see my screen again?
Yes, we can.
Okay,
yes.
Cool. So this trade payables ledger then goes hand in hand with the trade payables list, right? So I'm going to take you through each transaction, guys, and then we'll address how it impacts the payables control account and payables ledger. So we deal with it in that line. And again, I'll share the notes thereafter, so it's easier for you to make sense of it. So they say, Mabelo Moreni, the owner of ZAC Traders, requested you to investigate why the balances of the trade payables control account differed from the net total of the list of balances of the creditors in the trade payables ledger. Your investigation disclosed the following. So before we even go further, they're basically telling you that the control account and the ledger do not agree. And in a perfect accounting system, the control account and the ledger need to be the exact same balance. So if you see a debit on one side, you'll have to see a debit on the other, which means we need to see where the missing link is. What this means is that something could have been inputted in the trade payables control account, but potentially missed out on the payables ledger or the list, or vice versa. So we need to see, based on the information they give us, where it's missing, and we need to adjust accordingly. So note 1 basically says the trade payables column in the purchases and purchases returns journal were undercast by 3,850 rands and 1,500 respectively. So what is this actually telling us? It's saying when you had, so if we think about the trade payables account, right? What is actually sitting in a trade payables account? You'll have, as Sisanda took us through it, you'll have all the people that you owe money to. So if you went out into market and you purchased something, then you'd obviously raise that creditor in your trade payables account. So when you are increasing your trade payables account, when you're increasing that creditor account, you're going to credit the creditor, and you obviously the contra is going to go to the purchasers. So this is basically saying that we didn't record sufficient purchases, right? Because they're saying the purchases were undercast by 3,800, which means that creditor, you purchased from the creditor, but you didn't record it in your payables, right? So that's the 3,800. And then if we look at the purchase return, If you have a creditor, you record the purchase, you'll raise the creditor in your creditor, which is the trade payable control account. And that is to record basically the purchase of goods or material or whatever that supplier provides you, right? So if you're then reducing, if you're returning something, if you were recording it as a credit, that return will then be the contra, which is then the debit, or the opposite rather. So effectively, you're going to have a credit and a debit. So the credit will be related specifically to the purchase that was under cost, so 3,800, and then the 1.5 is going to be then the debit. So the way I'm going to do the questions, guys, we're going to look at, is it going to impact the control account? Is it going to impact the trade payables list or the ledger? So this note only talks about the payables column. So that's basically the control balance, right? They're saying that something was missing there. They're not making any reference to the list. So we will assume the list to then be complete. So the list obviously has the information, the payables account doesn't. I'm going to try split my screen, guys, just to, can you see both screens?
No, we can only see the question.
Yeah, currently just the one.
Okay.
No.
Okay. Sorry, I have to swap between tabs. So do you see the solution now?
We only see the general ledger.
Yeah, so that's the solution, right?
Yeah.
Okay, so basically, guys, the balances, it's going to be hard to show you between the two. So let me, okay, so the balances we saw, let's go back to the actual question. Okay, so if we go back to the question, you'll see that they say on the payables control balance, you basically have a 34,000 Rand credit. So you need to carry this balance. So you need to transfer this balance as your opening balance, if you want to call it, to that ledger account. And then the debit that you bring through is 250,000. Then the same from a ledger perspective. So the list that you start with is a 34,000 Rand credit and a 1,000 Rand debit. So if we go back to the solution, you guys are seeing the solution?
Yes.
Are you seeing the ledger? Okay.
No.
So are you not seeing the ledger?
We're seeing the ledger.
I'm not sure if that's a question or just background.
But background noise.
Okay. Okay, so you'll see the balances are carried down here. Here's a 34,000, here's a 250. That's from the balance, that first line of information you got. And that's then the trade payables control account. So if we move further down, this is the list of payables. There's a credit balance that they indicated, and then the debit. So this is just, this list is literally just a list with what's your credit, what's your debit. This balance at the end, in terms of your payables list, needs to agree with what's sitting here, right? So you'll see that basically agrees. Okay, so then if we look at the first transaction that we spoke about, so they said the purchases were under cost by 3,850. So that means we didn't raise that creditor. So we are basically going to credit the payables control account with the 3,850. And remember, they also then said the purchase return was under cost by 1,500. So we obviously need to then bring in that purchase return into the trade payables control account as well. I'm going to move on to the next one. We can take questions at the end purely so that we can get through everything. And that's then my worry that we don't. Give me a second to reshare again. Is everyone fine thus far though? Like with understanding, am I going too fast, or is there anything from the group, Sisanda?
No, I think all seems clear.
Okay, cool. Okay. Okay, so that was then the first transaction. The second transaction says that the trade payables column in the cash payments journal was overcast by 1,500. So you'll see here that there's no reference to the listing or then to trade payables ledger. They're talking specifically to trade payables column, which links to the control account. So automatically we know when we're looking at the required and we're going back to the solution, we're not touching anything in the listing. We're only looking at the control account. So effectively what this is telling us is that the payment that was reducing the trade payables account was overstated by 1,500 Rand. So we need to then adjust. That's why we then increase the trade payables account. So if we then go back to the solution, this looks very big. Are you guys seeing the solution?
Yes.
Yes, we can see it.
Okay, so here's
Yes, we do.
Okay, happy. So here's the adjustment coming through, right? So because we overstated the payment, we need to then adjust the trade payables control account. So that's a quick one. There's no differences. It's a straightforward amount that's then being processed to this account. If we then go back to the question, so that's then 2. If we look at number 3, so number 3 basically says the account of a creditor, Langeman CC, with a credit balance of 36 was omitted from the trade payables list. So you can see here that there's no mention of the control account. So that means we take for granted that the control account is then correct. This transaction has occurred correctly as it should in the control account. The only adjustment we need to make is then to the payables listing. So they're saying that he had a credit balance. That effectively means he owed us money and we didn't include it in the trade payables list. So we need to then go and raise that credit balance in the list. So you need to include that 3,600 Rand in the list. So if we then, if we go back to the solution,
sorry, I mean, there's someone who's saying that you're going a bit too fast.
Okay.
So it seems to be people event. It's going a bit too fast.
Okay, I will slow down. I see we do have an hour left, so I will slow down. Do you want me to take you through the first 2 again, or is it just this one?
That comment was in the second one.
Okay, do you want me to go back to the second one?
Yes, please.
Okay. So do you want me to go back to the actual, okay, let me just go back to the question. Sorry, I'm just trying to go between screens here. Okay, so it says the trade payables column in the cash payments journal was overcast by 1,500, right? So effectively, what that is saying is that the payment that normally reduces the trade payables account, the actual payment, had 1,500 Rands more sitting in that payments account, right? So it means we've effectively, you can say, overpaid. We've overstated that. So we need to then raise that creditor or the payables with 1,500. Am I making sense, guys? Again, this doesn't impact the listing because for all intents and purposes, they've given us no indication of the listing here. All they've spoken about is the payables column. So it's only going to then impact the control account. So we'll then have to credit the control account. Is it, are you understanding it more? Do I need to elaborate a bit? Is the pace fine?
Please elaborate. The pace is fine.
May I ask a quick question? I see in the journals it says that the number 2 that you're speaking about will be on the debit side, and then I see in the answers it says journals debit, but it says 1.3. But then in the question it's 1.5.
Where's 1.3? Sorry.
The trade payables control, the answer, the general ledger in the answer.
The general ledger. Sorry, now I've
In
lost
the
the screen
answers.
I'm sharing. Give me a second to just find the solution. Sorry, I'm just going to the solution. I seem to have lost it. Where is it? Give me a second, guys. Sorry, I swapped between screens and now I can't find them. Okay, now I've got it. Okay, please say again. Now I have the solution in front of me.
Okay, yes. On the debit side, the third transaction, journal debit, says 1.3.
Yes.
Where does that come from? Isn't it supposed to be 1.5?
No, what? Oh, so you're confusing the return with the 1.3.
Yes.
No. So it's two separate transactions. So you'll see. Let me try to split the screen. I'm going to try splitting the screen again, and I'll show you. I don't know if you can split the screen though. Just give me a second. But you see the 1.3 refers more to note number 11 as opposed to the 1.5 we're talking about. So it's two separate transactions.
Okay. And then, okay, no, thank you. Let me just follow. Thank you so much.
Okay, cool.
I think the confusion comes from that purchases return. That 1.5 was mentioned for the purchases return, and then
yes.
it was in the first transaction. So we are confused because we thought maybe, okay, let me just speak for myself. I think maybe transaction, this purchases return was for the first transaction. This entry, it was from the first transaction where it mentions that there's a 3.850 for purchases and then 1.5 for purchases return. And also on the second one, they mentioned 1.5 again on the trade payables that was overstated.
Yeah, so this is, am I sharing the right screen? So this relates to the actual purchase return. So if we go back to, so basically what I'm saying is, note 1, this is the purchase return that I'm talking about that is sitting on the credit side.
Okay, so where is this one for the second transaction?
It is, it is here.
Where?
Can you see my screen?
Yes, I can see it.
Yeah,
it's the
here.
second transaction.
Yes, it's further down here.
The one that is highlighted in pink.
This is transaction 1. This is the purchase return.
1.5 for the second transaction is the one on the credit side.
Yes.
But it's written bank settlement discount received.
So if we go back to the actual, so if you look at, can you guys see my screen again?
Yes.
So this is saying it's a cash payments journal, right? So it is basically a bank payment. And that's why they use that, what's the word? That description.
That settlement discount received.
Oh. Say again?
Are you saying that's why it is recorded?
No, it's not. It shouldn't be discount received, but they're basically saying cash payment. Because remember, the bank was overpaid effectively, right? So this is now, it's just a terminology, but this is just raising the creditor because of the overpayment. So I'm trying, I would just say it's an overpayment. They're linking it to the bank to say that it was overcost, but that's why they're using that terminology. But this is the transaction for that. I wouldn't use settlement discount because there is no settlement discount in there. Sisanda, I don't know if you agree, but I think it's just a terminology of it, but it's just literally a bank payment. It's not a settlement discount. I think that's probably where the confusion is coming from because they're saying settlement.
Now I'm so lost because I don't see the entry for this second transaction. For this 1.5, I don't see it on that trade payables control account.
So it's the one that says the settlement.
The one that is far down on the credit side.
Correct. Yes, it's here. If you see my screen, it's the one that's highlighted here.
Okay. Thank you.
So, ma'am.
So I think the confusion is because they're saying settlement discount received. And the only reason they're probably saying that is because there was almost like an overpayment. So there's a mismatch between date that the transaction was settled and when it was recorded, and they've almost prepaid, if you could say it like that, right? So they've now raised that creditor, but it shouldn't be settlement discount. So it's literally just a bank payment that went off more than it should. So they've raised in the creditor for when that creditor comes in, if I'm making sense. Sisanda, I don't know if I'm making sense to you, if you want to elaborate on this.
Yeah, no, I think you've
Can I ask a
this.
question?
Yeah. So I think you explained it quite well, Amy. Yeah. So I think the point is that this is a payment which was overstated, right? So that is why they are crediting the trade payables account with this value. Normally, a payment would go on the debit side, right? Because we reduce the creditors on the debit side. Because this was an overpayment, it's being put on the credit side, almost to reinstate the liability.
So what should our details be? Should it be bank?
You can't, like bank is a bit, you can't, I would shy away from using bank, but I see they've also used bank here. The reason I'm saying I shy away from using bank is purely because you'd have a bunch of transactions, right? Like you'd have quite a few transactions, and to label everyone bank would then be confusing and hard to track. So I think that's probably why they then said bank and settlement discount, to almost lead you to what the payment relates to. You could say, let's just go back to the scenario. You could say, yeah, I suppose you can say bank, hey, because effectively it is an overpayment. I think the settlement discount for me would not be an appropriate reflection, but definitely bank has to be in there somewhere. The reason they probably didn't use bank here was because there was another payment that also said bank. So probably just to not cause confusion, but I think settlement discount caused more confusion.
All right, so for future references, should we get something similar to this? Is it appropriate then to say bank?
Yes.
All right, thank you.
Yeah. Because the question never said settlement discount. So you can't make that assumption, right? I think this is just to distinguish it. If it said settlement discount, then you can include that. But in this case, I'd say it's safer to just say bank.
All right.
Okay. Are you guys happy with transaction 3, or do you want me to go through it again? I'm not sure if I completed it.
Yes, we are happy, ma'am.
Okay. Okay, so then we're going to move on to transaction 4, which is, just going to make this bigger. Can everyone see this page with the transaction 4?
Yes.
Take that as a yes. Okay, so transaction 4 says, an original credit note received from Belantu Importers for 285 rands was recorded correctly in the purchaser's return journal, but was inadvertently posted as 825 rands to that entity's account in the trade payables ledger. So one thing I want to draw your attention to is the fact that they mentioned credit note. So they're saying there was a credit note, it was incorrectly recorded on the listing. They're not saying anything about the trade payables control account being wrong. So we basically are going to assume that the trade payables control account is then correct. And then we are going to make the adjustment on the listing, right? So all they're saying is that there was an error in the amount posted. So again, please be careful. When they talk about a credit note, effectively what happens is normally when you get a creditor, you would raise the creditor on the credit side, right? This is now reducing that creditor, so would be a debit, right? Everyone's still okay with that, right? So it's sort of like so the actual creditor is the credit, and then you could see the credit note almost like a purchase return, like how we've dealt with the previous one. So it will then be a debit. So we need to effectively post the correction. So what happened was the transaction was only for 285, but they posted 825 rands. So they basically, there was a difference of 540. So it's the 825 less the 285 rands. And that gives us then the difference of 540. Because this was a credit note that was overstated, it means that the actual creditor had too much of the amount we owed him, reduced. So effectively, we reduced his balance with more than what we should have. So we need to almost increase that creditor's amount to what it should be, which is the 540 rands more. Am I making sense? I'm going to go to the solution whilst you advise. Can everyone see my screen?
Yes, we can.
Okay, cool. So again, we had a creditor, right? Basically, we recorded it incorrectly and we reduced his outstanding balance by more than what we should have. So he had a credit note due to him, but instead of only reducing it by 285 Rand, we reduced it by 825 Rand, which means we reduced his balance by too much. So in order to correct that, we're going to then add, so effectively credit that balance. So that's the 540 you're seeing there, right? So we are, sorry, it's this one. So that's basically increasing the balance. Okay, Sisanda, you let me know if there's any questions or hands or any notes as I'm going. But if you don't stop me, I'm just going to keep going until the end, and then we can take questions.
Sure. Okay. So yeah, there is a hand.
Okay.
From Tam Sangma.
Okay, I'm not hearing the question.
Tam Sangma, please unmute and speak. And this is an old hand. It seems to be an old hand. And then also from Precious. Precious saying she's lost. So I'm not sure which part she's lost in. Precious, do you wanna unmute and ask your question for clarity's sake? Precious?
No, sir, you may continue.
Okay.
Okay, so I'm going to continue. Okay, note 5 says a discount of 1,570 rands, which was received from Byler Clothing on settlement of Zack Traders account, was not recorded in the account of Byler Clothing in the trade payables ledger. So again, this is not saying anything about the trade payables control account. So we will then make the assumption that the control account is correct with regards to this supplier, and we then need to adjust the trade payables ledger or listing. So they're basically saying that we received this discount, but we didn't record it in the payables ledger. So there was no amount posted, so we need to then post the discount. So if you think about the discount would effectively then reduce the creditor. Sorry, I'm just swapping between screens here. So the discount remember, when you're raising a creditor, you are crediting the trade payables account. When you receive a discount or you receive a purchase return, you are effectively debiting it. So this debit leg is effectively missing from the listing, and they're saying to us that there was no amount posted. So the discount was not recognized on the listing. So you're basically going to reduce that trade payables listing with the 1,500 to account for the fact that the discount was not then reduced, right, or not recognized. So there's then the 1,570 here in red. If we go back to the question. Okay, so we're now looking at, question transaction 6. So transaction 6 says the debit balance of 1,030 rands in the trade payables ledger was in respect of overpayments to creditors. This amount that includes the opening debit balance of 250 rands in the trade payables control account must be transferred to the receivables ledger. The creditors have agreed to this transaction. So effectively what they're saying is there was an overpayment to a creditor. This means that the creditor now owes us money. We've paid him more than what we owe him, right? And that effectively means that the easiest way, if you're looking only at your trade payables account, is to increase his balance, because we've paid him too much. So we now need to correct that balance and increase that balance, right? The note says that this amount was included in the opening balance debit, which means we need to adjust the control account by crediting it to reverse out the overpayment and increasing the creditor. You'll see here. Okay, let's go to the actual solution so I can show you whilst we're speaking. Okay, everyone can still see my screen? Okay, so this is then the listing. So here's the receivable balance coming in here. And you'll see then the receivables balance coming through here. Can you guys see my screen?
We can.
Okay, cool. So effectively, because we overpaid, the only way to correct it from a payable perspective is to increase the creditor. And increasing a trade payable account will be increasing on the credit side. So there's then the 1,030 rands increasing the creditor on the creditor side. And then if you look at then the trade payables, the list itself, they're saying the scenario said that they're transferring it to the trade receivables ledger, and they've agreed to this. So you see it coming through here. Okay, so if we then move to the next, that is transaction 7. Okay, so it says, sorry, are we still fine for questions, or is there anything that's uncertain?
Yes, so there's a hand.
Okay.
From Masiho.
Okay.
Good evening. I just have a question pertaining to overpayment. So if the the amount was overpaid to the creditor, shouldn't it be debited on the trade payables because of they need to repay us that overstated amount of what's that 1,030?
But
I
this
don't know
was
if
the
I'm correct.
so this is saying this is the debit balance in the trade payables ledger. Was it related to this debit balance? So generally, if it was then an overpayment, you'd look at it like that. But because it's making reference to the debit balance, because remember the debit balance is talking to all the reductions.
Okay.
Are you following?
Yeah, makes sense. Thanks.
Okay, cool. Okay.
There's also one from Ian Baker.
Okay.
Evening.
Hi.
Before you can go through to transaction number 7, can you please just go back to number 6 and explain it again once more? Because I'm lost there. I didn't know what happened to 1080 and 250. So please just elaborate a little bit.
So
Thank
you
you.
didn't understand with 5 and 6, or you're saying 6 alone?
6 is 5 and 6.
5 and 6.
Correct. Thanks.
Okay. Are you happy for me to go through 7, 8, 9, 10, and 11 and then come back to 5 and 6? Or do you?
No problem. You carry on with 7, 8, 9, 10. Just posting the question, then you can come back on once you're done. Because now answering, going back and forth, we're gonna waste more time.
Yeah. So and then I suppose I just want to get through the question and then we can take questions and I can then go through any of the other transactions in more detail, provided we have more time.
Thank you.
Okay. Okay, number 7 basically says an electronic payment of 6,500 to Safako Wholesales, a creditor, was recorded as 5,600 in the cash payments journal and posted as such the general and trade payables ledgers. So this is basically saying there was an incorrect payment made on the listing and on the general ledger. So we need to then correct the control account, right? Because it's basically saying it transferred like that from the general to the control account. So they're saying the payment, we made a payment of 6,500, but we only recorded it as 5,600. So the difference between the 6,500 and the 5,600 is the correction that needs to come through. So we paid the creditor more. So we therefore need to reduce that creditor with the amount that's missing. We've currently only recorded 5,600, but so we need to record another 900 Rand more, right? In terms of what the creditor paid. Just swapping between screens. Okay. Can you guys see the screen? Okay, cool. So that 900, remember this was a payment. So creditors will increase, or payables rather will increase on the credit side, and any repayment to the supplier would come through here. Any purchase returns will come through on the debit side. So we've recorded too little of the payment to reduce a supplier that's sitting on the credit side. So we're then going to process the 900, and that's then going to reduce the creditor balance that's sitting on the credit side. So the 900 again is the difference between the 6,500 and then the 5,600. So if you think back to the question, they said that this was incorrect in the ledger and in the listing, which means you need to adjust both the control account and you need to adjust the listing. So you'll see it coming through here. So they are then reducing the listing, the trade payables list, with that additional 900 that was missing due to the supplier payment. Okay, everyone's still fine? Okay.
Sorry, I mean, there's a hand from Simi. Not sure whether or not that also wait until the end. Simi, or if it's a burning question.
Good afternoon. Hello, can you hear
Hi.
me?
Yes, we can hear you.
Well, I have a question based on question 6. But now that we have passed, I think it's fine. I'll try and catch up.
So I'll do 5 and 6 once we'll go back. So I do think we're going to finish a little bit ahead of time. So I'll go back to 5 and 6 when we're done. So that, because I think a lot of people had questions on 5 and 6.
Noted, no problem.
Okay, cool.
Yeah.
Okay, is there any other questions on 7? Okay, I'll take that as a no. So note 8 says the credit balance of Mamela Shop Fitters of 445 rands was recorded twice on the list of trade payables at 28th of Feb 20.5. So you can see that basically they are only talking to the recording twice on the payables list and not on the control account. So with that being said, we know that the control account for this transaction is then correct. It's been recorded correctly on the control account. So it's only the listing that then needs to be corrected. So there was a duplication on the listing. So we basically need to remove that duplication. So if we go to the actual solution. So you'll see there's nothing coming through from a trade payables control account. And you'll see that in the listing, we have then removed the duplication, right? Is everyone still fine? Still with me? Okay.
Yes.
Okay, that was an easier one. It's quite straightforward. Okay, then note 9 says, the purchase of merchandise from Andries Traders for 1,450 rands was recorded correctly in the purchase journal, but was posted to the wrong side of Andries Traders account in the trade payables ledger, right? So they're again talking to the payables ledger, which is talking to the listing, and that tells us that the control account is then fine. So what they're basically saying is that there was an incorrect posting on the listing. Our creditor would have generally increased because we made a purchase, because we owe that creditor more money. So we would have credited this. If we posted the entry correctly the first time, we would have been adding to the list, right? Because we posted it incorrectly, we now need to correct it and then bring in that purchase of 1,450, right? So we need to increase it twice. So one is to correct and one is to record, because because they posted it on the wrong side to begin, on the wrong side to begin with. So if we go to the actual solution, you'll see that coming through. Let me just swap screens. So here's the 2,900. So it's basically the 1,450 multiplied by 2. Again, when you are recording the initial purchase, you would have credited the creditor. So that would be the normal transaction. Because they debited it, because they posted it incorrectly, you are then reversing out that debit. So you're going to credit the first time to reverse out that debit. And the second entry will be the actual recording of that purchase, which is why you're then processing it twice. Okay, I hope I've explained it clearly. Then we move on to note 10. So note 10 says, it was noted that there were credit balances amounting to 1,855 rands that appeared in the trade receivables ledger. Further investigations disclosed that these balances were in respect of transactions that were concluded with creditors during Feb 20.5. The inexperienced bookkeeper opened these creditors' accounts in the trade receivables ledger. The trade payables control account was, however, not affected by these incorrect entries. So that line alone says control account is fine. We don't need to correct anything in the control account related to this 1,855. But what they're basically saying is that instead of recording this 1,855 in the, so they're mentioning that it was a credit balance, right? But they recorded it in the wrong book. So instead of recording it in the trade payables ledger, they recorded in the receivables ledger. So all you're going to do is you're going to move that from receivables to payables. And you'll see that 155 coming through in the solution. Just swapping here. So we're increasing. They did say it's a credit balance. So we then go increase with the 1,850. Okay, so that is pretty, that's a more straightforward one. There's no calculations in between. Okay. Then the last note says the total of the journal debits and credits for trade payables were 1,300 and 3,600 respectively. So this is then trade payables. So that's talking to the control account. So the debit is 1,300 and then the credit is 3,600. So all you're going to then do is transfer that to the actual control account, right? So there's then the journal debit and then there's the journal credit. So effectively, when you look at the list of trade payables, you will then subtotal this and this should give you your end balance. This balance should then agree to what your balance on the trade payables control account is. You'll see here that, okay, so just to take you through how we got to this, you guys can see the general ledger account, hey?
Yes.
Okay. So basically, you'd total whatever's on this side, and this would give you your 44,495. You'll total these elements here. So the 250, the 15, the 13, and the 900, and you'd be short with the 4545. The total on your debit side needs to equal to the total on your credit side, and that will be your balancing figure. This balancing figure then agrees to what's sitting here from a listing perspective, and then so that's carried down, and then you bring down that balance as your new balance that's brought down. So that's effectively how you will check to ensure that you've accounted for all transactions, right? If we go back to number 5 and 6. Is everyone fine up until this point, apart from 5 and 6?
There's also a request for us to redo question 9.
Question 9. Okay. Okay. So basically, okay, question 9, let's do 5, 6, and then 9. Is that fine? So we just cover from the top. Say again?
And 7 as well.
And 7. Okay. So basically, 5 is saying to us that a discount of 1,570 was received from Byla Clothing on settlement of Zach's trading account, right? So they're saying Zach's account was settled and we got a discount, right? So effectively, when you get a discount, you will record it on your debit side of the trade payables control account, right? That's so the way your the way your accounts work. If you're looking at a creditor or any payables, anything that's going to increase your creditor is going to increase on your credit side. Anything that's going to decrease your creditor is going to happen on your debit side. So this is a discount that was received from the supplier because we settled our account. So the supplier said, I don't know what their balance is, but if we don't look at this 1,570 rands, let's just say you owe the supplier 10 rands and they say to you, don't pay me 10 rands, pay me 9 rands. I'll give you a discount of 1 rand. So effectively you are paying them less, right? So in this is the same situation. Instead of paying whatever amount you owed them, you're paying them 1,570 rands less. So when you initially record your transaction, you will record it at the full value that you purchased. So if you, let's just for argument's sake and for the interest of transaction 5, let's just say that you purchase for 10,000 rands from Byler Clothing. You purchase from them for that 10,000 rands. So when you do that purchase, you're going to increase your creditor with that 10,000 rands. Up until the point of settlement, you have no idea that there's going to be a settlement discount. So you record that purchase at 10,000 rands. Now, when you get a settlement discount, you have to record that discount because effectively it's less money that's flowing out of the bank. It's an income because the settlement discount received, and it's going to reduce that debt you had. Remember, when you initially recorded it, you would have recorded it at 10,000, but the money that's leaving your account is not going to be 10,000. It's going to be 10,000 less this 1,570 rand. So that 1,570 rand is going to be a debit, and that's going to then come through in your payables list. Am I making sense? So I think, guys, if whoever had questions on point 5, if you can drop in the chat if you're happy with transaction 5 or you need me to go further with it. Because if we don't, like, I want to know if I've answered your question or not. I'm trying to explain it more simplistically. So if it's making sense, please do let me know.
Yeah, there were a number of thumbs up.
Okay, happy?
Yeah, happy.
Okay, cool. Then with point 6, so they're saying the debit balance of 1030 in the trade payables ledger was in respect of overpayments to creditors, right? So basically, we have paid a creditor more money than what we owe them. So you need to correct it, right? And that is essentially the crux of it, right? So they're saying, if you look up here, there's the 130 and the 250. So they're saying the debit balance of the debit balance that's sitting here consists of an overpayment, right? So they're saying this amount that includes the opening debit balance of 250 rands. So you'll see there's the 250 rands there. Sorry, my mouse seemed to have froze there. This amount includes the opening debit balance of 250 rands in the trade payables control account must be transferred to the trade receivables ledger, right? So all you're going to do, right? They're saying this is then the overpayment, this 1030. They specifically identifying, right, that is what it is. So you're going to basically add it. You are increasing your creditor because you've overpaid. And it's, so think of it like this. When you got to a debit balance because you've been making payments and making payments and making payments, right? So that balance started as a credit, and you've basically then you've paid and paid and paid and paid until it moved into a debit balance. And the reason it moved into a debit balance is because you've paid too much. Now, to reinstate that balance, you need to then credit it. Have I made sense? Sisanda, you're going to have to help me here if there's any hands that require further explanation. Is there anyone that needs me to elaborate?
Not this one. I'm still seeing Simi's hand. Show me that it's an old hand. Oh yeah, there's a hand from Dala and Precious.
Okay.
So they just came up. Guys, please unmute. Ask your questions. Let's go with Dala first.
Okay, I am not making sense as to this amount is mentioned 3 times or twice actually in the question. Now, I don't know whether I should record it in the ledger or in the list, or I'm not understanding that part.
So you're recording it in both, right? Because they're saying, so they're saying the debit balance of 130 in the trade payables ledger relates to overpayment. So there's it here. There's a 1030, and that's the trade payables. So that occurred here. And then they're saying this amount that includes the opening debit balance of 250 in the trade payables control account must be transferred. So it's in both. It's impacting both. So you'll see if we go back, let me just share. So there's the 1030, that's a transfer to trade payables receivable, and then there's it here again. Have I answered your question?
Yes, you have in some way. Thank you.
I'm happy to try explain it a different way, but you guys must just tell me where you're getting stuck or what you're not understanding fully, and then I can try elaborate.
Ma'am, I think what's confusing is that like the balances are like in different, like the transactions are in like different places. I don't know if that makes sense, but like it's not like in order.
Yeah, I think that is
I think
confusing.
that's confusing.
Yes, because you expect to see the flow from 1 to 10. You expect each one to be beneath the other. I think the reason for that is because some of them impact the control account and some impact then the listing, and it throws it out. So maybe what I can do is I can I'm just going back to the solution. When I share the notes, I don't know if this is going to make sense. I can draw this trade payables, and then maybe I can say, but obviously this is a learning exercise, right? It's not for you to write like this in the exam, because that's going to just be very difficult for the person who's marking. But maybe what I can do is I can say, purchases, this relates to transaction 1, and label it according to the transactions that occur. Or maybe I can then just say transaction 5, no impact. But
Yes,
obviously
yes,
this is
please
just
do
for
that.
learning.
Please do that. Please
This
do that.
is just for learning though. Hey, don't write it like this in your actual paper, because it's going to just cause you to be penalized. So I can do that for purposes of you understanding and learning, and then I'll post it on the eTutor group.
All right, thank you.
Okay.
There are about another 3 more questions.
Okay.
From Precious, I'm assuming that's an old hand, Precious. Theodore. Theodore has a question.
Yes, ma'am. I have a question. So with regards to the debit balance of a credit account, it's like, for example, having maybe a clothing account balance of, let's say, 500 rand. I owe 500 rand to Edgar's.
Yes. Sorry, is that your question? Maybe ask it again. I thought you were giving me a statement.
Can you hear me now?
I can hear you. Yes, you can go ahead.
Yeah, so then I owe Edgar's 500 rand. I pay them 600 rand by mistake. Now that means that I no longer owe them. They owe me the difference because I overpaid them with 100 rand. And in their books, they will record that 600 rand as a credit balance, right? But in my books, I will record it as from my bank 600 rand went out, and then I paid this creditor 600 rand, but I was only owing them 500 rand. So what am I gonna do with this 100 rand? In my books, I must credit it again according to what we are doing now.
You basically
I must raise it.
Yes, that's what you're doing, because you've overpaid.
I overpaid with 100 rand.
Yes.
Okay, now I understand that transaction, this transaction of 103. It's the same. It's the same way we overpaid these creditors.
But this is, remember, this was because of the debit balance that was sitting there already. So
yes, because
yeah,
that debit balance is they
is
paid
payment.
more, or we
Correct.
paid more already.
Correct.
Yes.
So you effectively
So
raising the creditor.
I'm raising it.
Yes.
Okay. No, I understand. Thank you.
Okay. Okay. Then Sisanda, if I remember correctly, you said it was number 9. Hey.
Yes, but there's still a question. I think there was a hand from Kumo.
Okay.
We're still on this point. Kumo?
Yes, hi, greetings everyone. I just wanted to ask about the recording. Would it be uploaded on YouTube or on under announcements?
Yeah, I think it'll be under the announcements. I think that's how they'll be doing it with all the other classes.
Okay. So on our under the module, right? You'll find it under announcements.
Yeah, so it will keep. I think we'll confirm that, right? With
yes.
There's Joseph. I think Joseph wants to.
Okay, no problem. Thank you.
Hi, how are you? Yeah, easy marks that one should get very quickly. Okay. What we call.
How are you?
Good. And thank you, Joseph. Yeah, please.
Yes, we post our classes under our YouTube FAC 150 YouTube channel. Then I posted the link on the chat.
Okay. So, sir, can I ask, when can we expect to see this this recording uploaded onto the YouTube?
Let's say maybe tomorrow afternoon. Yeah, let's give it tomorrow afternoon.
Okay, no problem. Thank you very much.
Oh, thank you. Bye.
Thank you, Joseph. Oh, maybe there's 2 more now that came up. Okay, 1 went down. Tabiso, still on the same issue? Okay.
Can I go on?
Yes.
Oh, sorry, I haven't heard, I didn't hear anything on my side. Are you happy for me to continue?
Yes.
Okay. So I think it was transaction 9. Hey.
Yes.
Okay. Okay, so transaction 9 again is saying the purchase of merchandise from Andre's Traders was for 1,450 Rand, was recorded correctly in the purchase journal, but was posted to the wrong side of Andre's Traders account in the trade payables ledger. So basically, he made a purchase, but we took it to the wrong side. So instead of recording the purchase, we actually, if you think about it, from the other side, we actually recorded a payment against him. So we reduced his debt instead of saying, but there was a purchase, if I'm making sense in that way, right? So there was a purchase, there was an incorrect posting in the ledger. Normally, our creditor would have increased because we made a purchase, right? So it would have been a credit. But because we processed it incorrectly, we have actually then done a debit. So you need to reverse out the incorrect entry. So you need to credit it, right? So you're going to add it to your listing with the 1,450. So when you add it to the listing, you are removing the incorrect debit of 1,450. But you also then need to record the actual purchase of merchandise. So then you're going to record another 1,450. So there's going to be 2 1,450s. I'm not sure if you're understanding better or if I can explain it differently.
I think we get that one, ma'am.
Okay. Is there anything else that you'd like me to go through?
Sorry. There was also question 7. Wait, I think there was one to read question 7, please.
Okay. Okay, so for question 7, they say an electronic payment of 6,500 to Safako Wholesales, a creditor, was recorded as 5,600 in the cash payments journal and posted as such to the general and trade payables ledgers. So basically, they're saying that there was an incorrectly recorded payment made on the listing and the general journal. So because they're making reference to the general journal, we know that the control account is also then affected. So both the control account and the listing is then incorrect by this 900 Rand. The 900 Rand is the difference between the actual payment of 6,500 Rands and what was recorded in the books of 5,600 Rands. So effectively, we paid the creditor more. We paid him 6,500, right? But we only recorded 5,600. So if you think about the transaction, right? So you owe him 6,500. So you're going to have a credit for 6,500 in your trade payables account. And because you paid him, you're going to record a credit of 6,500, a debit, sorry, of 6,500. But instead of recording a debit of 6,500, we recorded a debit of 5,600 only. So you need to process a further debit of 900 Rand so that the full debt of 6,500 is then reduced, or your full liability. So effectively, when you look at Sefako wholesales, you'll have the actual creditor for 6,500. You'll have the initial 5,600 that was incorrectly processed and an additional 900 that's reducing his debt. So that's why the 900 is then debited. Everyone still okay with 7?
Thumbs up.
Okay.
Yes, thank
guys,
you.
Okay, perfect. So what I'll do, guys, as mentioned, let me just go to the solution quickly. Okay, so what I'll do is I'll try to put the actual transactions in order that it is in the transaction listing. And then I'll also then just indicate what's note 1, what's note 2, just so you can understand the flow and understand what's happening. I'll try to do that today and post it on the groups tomorrow. Again, please don't do it like this in your sessions. This is just to aid you to understand why the transactions look the way they do, and also to allow you, when you see a question like this, like what is the first thing you do? For example, you bring down your balances. What is the last thing you do? So I'll do it in a way that you need to then apply the thinking behind how to complete a trade payables control or a trade payables listing. I will post that on the group, and I'll also include the notes that were prepared for the session. And the notes basically will look at each of the transactions. If I just go back here. So the notes look at each of the transaction and looks at what's sitting in the trade payables account, what's sitting in the listing, what is the information telling us, what do we need to do with it, why do we need to put it here, why does it need to go to the payables control, or why does it need to go to the listing. So I think that's comprehensive enough. Is there anything else you'd like me to add to help with you understanding this, the liabilities, or is there anything else, Sisanda and I can assist from a notes perspective?
So I mean, there's a question in the chat.
Okay.
It says, I'd like to know how do we know where do we record the transactions, considering the fact. Oops, jump on. Where did it go? Yeah. I'd like to know how do we know where do we record the transactions, considering the fact that we have to post them in the list and the trade payables ledger. So that's the thing. I think that's a question. You mentioned that quite a number of times. Maybe? Did you get that? Okay. Amy, are you still there? Guys, am I audible?
Yes, you are. I think Amy left.
Okay, I think we seem to have lost Amy. Okay, so that, I mean, so you would have heard that a number of times, you know, the question paper kept on referring to, you know, that something's included in the ledger or it's included in the control account. Obviously, if it's included in ledger, it means that then you assume then it is correct, and therefore there is no adjustments that need to be made in the ledger. It will only be in the control account. So where it's specific that this value is not included in the ledger, so it's not included in the control account, that's when you will then make that adjustment. So I mean, so you need to read the question quite carefully to know where to adjust. I hope that helps. And oh, he's audible. Am I not audible?
You were, but you were cutting a bit.
Oh no. Okay, but basically to answer that question, it's that you need to read the question quite carefully, because it will say whether or not the value or the adjustment is included in the ledger or it's included in the control account. So there is no hard and fast rule, but you need to make sure you read the question quite clearly, in order to know where to adjust. But I think the questions, rather the notes that we'll share will help you understand that.
Sorry, Sasanda. Sorry,
Okay.
Yeah, sorry, I don't know what happened on my side. I had to rejoin.
Okay, cool. Okay, that's fine. Yeah, so the question was about how do you know whether or not to adjust the ledger or to adjust the control account? So that's what I was trying to explain to them, but they need to read the question quite clearly because it will depend on what the question says.
Yeah. And if they don't specifically mention it, like if they say I think the transaction 9 or 10 basically said it impacts the general ledger and it impacts the listing, then it impacts both. But if they don't mention the control account, then it means the control account is then fine.
Yes. Yeah, I'm seeing a hand. Show me that's old hand. Simi, I'm sure that this is an old hand. Simi.
Evening. Actually, I had a question to ask, or maybe okay. So I wanted to find out if we are able to maybe get notes following financial accounting. So, because I'm not really familiar with financial accounting and I'm really having a struggle. So maybe I thought maybe notes could help with maybe the definitions and how to actually fill in the general ledgers and all that.
So, Simi, on my side, I do upload notes after every study unit. So it is then under additional resources, and it basically will take you through every study unit and just in a nutshell what to look out for, what's important. Like now we're talking about creditors. How does a creditor ideally work? Where does it increase? Where does it decrease, etc.? So there is notes on there. And obviously I think, yeah, we update as we go. So I don't know if you've seen those notes or I'm not sure.
Okay, noted. Thank you. I'll check.
Yeah, and Simi, I mean, so and if perhaps there is a principle, I like you saying that you don't understand. Please also do raise it on my QNISA, because I mean that's why we're there. So we should be able to come back to engage you on that.
Yes. And Tebogo, I think you asked if we could share it on announcements. So we do share the link on announcements. So when we update notes, we do share that there is then notes that are added, and then it'll fall under the separate forums for study units. So study unit 1 to 5, for example. So the notes will fall under there, but generally it's under additional resources. So you can pick it up from there, and that gives you a nice summary of all the study units.
Can I ask, are the notes under, you said it's under additional resources, is it on the main module site or is it on the eTutor different group site?
It's on the eTutor different sites.
All right.
No,
but I think we have different eTutors.
Yeah.
Yes, because when I checked mine, it's not
on my side. There's nothing. I haven't had any announcement. I haven't had any, there's nothing on that group. Nothing.
I'm going to see if I can upload my notes that I've made thus far on the chat whilst we're here. And yeah, if not, then we'll speak to Joseph and see how do we then proceed and assist. Because as far as I understand, there should be notes there. I'm just dropping some in. Just want to see if it loads or not. It is big files, Susanda. I don't know if you're having the same issue. So it's quite a big file, so it's not actually going through. But Joseph can advise us, and then we'll let you know. But essentially, there should be notes on your eTutor site. Sylvia, I don't think, sorry, Susanda, I'm seeing notes or queries as we come through. One of the queries was, is it possible to upload them on the main site? We're in different groups. So we, as eTutors, do not have access to load on the main site. We do have access only to our individual tutor sites. And yeah, I think that won't assist.
I think on the different eTutor sites, not everyone, because it's different tutors, right? Or is it the same? So
it is different.
That's the problem. I think that's the problem.
Mine is 15E. eTutor site 15E. There's nothing there. No announcements, nothing.
Sure. Okay. I'm sure the amateurs have heard that. I'm sure they will get hold of the eTutor because they should have uploaded notes.
Okay.
Okay, I think we are done. It's now 4 minutes past 8. Guys, thank you very much for your time.
Thank you, guys.
Thank you for
I hope
listening.
Thank you so much.
Sure. I hope we've helped you.
Thank you so much.
Thank you, and all the best with.
Thank you, guys, and have a lovely good night.
Thank you. Bye bye.
You too. Bye bye.
Bye.
Bye.